Nigeria's gross domestic product GDP expanded by 3.98% year-on-year in real terms in the third quarter of 2025. Now, the latest figure is slightly higher than 3.86% recorded in the same period of 2024. This is according to new data released by the National Bureau of Statistics, and that was on Monday yesterday. Now, the NBS report shows the agricultural sector expanded by 3.79%, up from 2.55% in Q3 of 2024. Now, the industry sector recorded a growth rate of 3.77% compared to the 2.78% in the previous year. However, growth in the services sector slowed to 4.15% from 4.97% recorded in Q3 of 2024. Now, despite this moderation, services remained the dominant contributor to the economy, accounting for 53.02% of total GDP in the quarter, slightly above 52.93% recorded in the corresponding period of 2024. Well, my guest is Chief Consultant Adedipe Associates Limited, Dr. Biodun Adedipe. He joins me for this conversation to understand more about these figures. Good afternoon, Doc. It's good to have you on the program this afternoon.
Yeah, very good afternoon to you, Tolu. I'm happy to be here with you, having this conversation.
Thank you so much. I think it's just right that we start with the overall GDP figures of 3.98% growth rate for Q3 of 2025, higher than 3.86% recorded in Q3 of 2024. What are the fundamentals to you surrounding this growth? And tell us more about what we need to know about these figures from the NBS.
All right, thank you so very much, Tolu. I think the first thing for me to note is that, yes, the growth rate for third quarter of 2025 came out better than third quarter of 2024. But looking at it historically, it's a slight departure from what we had known over so many years, which is the fact that once the economy picks up second quarter of the year, usually the growth rate is faster in the third and fourth quarter. So the usual expectation is that when you have seen the results for the first 2 quarters of the year, the third quarter gives you a pointer as to where you expect the economy to end the year. So as it were, therefore, 3.9%, yes, is very strong growth. In fact, what it also speaks to is the fact that looking back, we are likely to end 2025 at a growth rate that is better than what we have had in the last 9 years, which means maybe up close to 10 years. Perhaps the highest growth rate we record when we compare end of 2025 with the historical past will be in 2014, which means we are trending to do a lot better than what we have had in 2015 up until date. That's the first thing to note there. Then also, in terms of 2 important things. One is sectoral contribution to the GDP. The other one is the growth rate. And we see an interesting development here. Okay, in terms of growth, finance and insurance top the chart with 19.63%, which means the bulk of that growth, again, has been coming from services anyway. The financial institutions and insurance top the bill this third quarter of the year at 19.63%, and that's quite strong. And interestingly, road transport followed that with 9.87% growth during the quarter. Thirdly, mining, a very interesting one, because we've always seen mining as a weak sector of the Nigerian economy. But the dynamics are changing. So we see mining also getting stronger in terms of growth rates, driving growth in the economy, especially metal ore and coal mining. So now these are indicating changes, not only in the structure of the economy, but in terms of where economic activities are pushing in terms of growth. Those are the first major observations. Maybe to also mention that oil recovery is now confirmed, so to say, because the oil sector also grew better than what we have experienced in the last couple of years, which makes us make that observation that is seeming recovery in the oil sector. So if you look at all this, they point in the direction of where the growth came from and what is driving the growth, and of course, what then the government needs to do in order to deepen that and also strengthen the other sectors.
The services space, I think I need to ask around that. I know you touched on it also, but that was the one of the most active sectors in the last GDP figures that we had, Doc. And now we are having a bit of decline. Specifically, we are at 4.15 from 4.97, which we had earlier. And that is, it's sort of, I'm concerned about it. So what's responsible for this? Despite that, service is still contributing more to the overall nominal GDP.
Good, very good observation there. But I put it this way, for me, it's not worrisome. And I put that in context of looking at how nations, economies have evolved historically. I'm talking about hundreds of years of data in terms of economic development. The usual pattern is that when economies evolve from the agrarian dominance, usually they go to the manufacturing, from what I call the small scale, minimal technology, and they're moving there to more intense technology, and then of course the more sophisticated one. It is when those two plans of agri and manufacturing are solidly grounded that you build service on it. So typically, ideally, when an economy is advanced, services become very major in terms of contribution. But we have seen that aberration for a Nigerian economy that is still developing. So for me, what we are witnessing now is a kind of correction. And I want to relate that to the fact that we are seeing the production, I call it production now, which takes both industrial and of course agriculture, are now getting more entrenched, which means they are attracting more investment, they are attracting much in terms of resources. So they are also deepening in terms of their contribution, which is a very important pointer also to productivity. Because one of the things lacking in our economy is productivity. Yes, the sector might be big. For example, agriculture contributes significantly to our GDP. But when you look at productivity in terms of harvest per hectare of major staples and even export commodities like you just reported on cocoa and a few others, clearly there's a pointer that productivity needs to deepen. If it deepens in the production sectors, then agri and industrial sectors should become more important in contribution. So for me, it's something positive that we need to drill further down and then see how we can deepen that.
Our production, the sector contributed 3.44% to total GDP. And I'm just concerned about the issue we've had with a bit of drop in production. I think, according to the NUPRC, that's because of the 3-day strike, I think, from Pengasan. I think that was around, that actually affected our production. But moving forward, what are your expectations from the oil sector and maybe specifically the non-oil space, which has also been performing pretty well than before?
Excellent. Now, that brings me to two important things here. One is which sectors contributed the most. Then how do their contributions compare to what they did in the second quarter of the year and then in the third quarter of 2024? Clearly, agri is doing a lot more, contributing 31.21% to our GDP in the third quarter of this year. And it is something I've observed as a difference between 2024 and 2025. Typically, the harvest period in Nigeria for most of our staples is between July and August. But what has happened in 2025 is that that period got extended, which is a pointer to the fact that there's a lot more investments in agriculture by both domestic investors and foreign investors. And that is showing in what that sector is contributing to GDP. So agri, therefore, is deepening in terms of contribution, and that is very good. Telecoms also is one of the top 4, I would say. And of course, we have trade as number 2, 16.42%. Then we have real estate maintaining the position it attained during the second quarter of this year. That is moving from number 6 to number 3. It still remains as number 3. And of course, to make the top 4, we have as well, manufacturing. So what we now say, let me say the top 5. So what it then means is that the two critical sectors that can drive job creation, agri and manufacturing, are still part of the top 5 in terms of contribution to our GDP. So that means also we are trending in the right direction. Now, what is more interesting there is the fact that when you look at these sectors, these are the ones that are also leading in terms of growth. So when it becomes quite different. I mentioned that earlier on, financial institutions, transport, mining. But if you now come to look at sectors like insurance, you look at road transport, telecoms, crude oil, and construction, they are also experiencing a faster growth in terms of contribution. So what we then say is that anytime you look at the economy, in this instance, two major blocks to look at, those that contribute the most, that's where most value is being created. So how do we create more value in there? Then the second are those that are growing fastest among them all. So these sectors have also been identified. How do we make them to even produce more value within the economy? So, and those are the things we look at, and we now say, okay, clearly there are prospects for the economy in terms of priorities for government, in terms also of those who want to invest, knowing where to go and where value can be created. So those are the things that we see currently, looking at the data on GDP.
It looks good because moving forward, you said you already projected on what we might be closing.
That the economy might grow at 4.58%, which some of us had as the expectation before the data came out yesterday. And then even the government's own expectation for this year are unlikely to be realized, which means the economy is trending more towards 4.0% for this year. That's if it is 4.0%. So now, given that, it means the focus now should be more on how do we expand the space for MSMEs? Because in reality, micro, small, medium-scale enterprises are the one that create most jobs, and they are the one that also create more value. And what do I mean by that? In terms of number of jobs, in terms of contribution to GDP, they are very, very important. So the question then is, what do we need to change in order to deepen their footprint within the economy? And that is where I believe the government needs to give more attention now to the space of development finance institutions. So what more can we push in that direction? How can we create an environment of incentive that will make MSMEs thrive? And that is the real key issue. If we are going to grow the economy inclusively, that is create jobs rather than create millionaires. And that is the real thing for me as we stand today. And I will also mention this. The government must look more at using incentives. But there's a principle in economics that says people respond to incentives. Typically, we illustrate it. You want any area developed, government should build the road to that area. Private investors will go and build it up. And that is the way I look at this. If we want MSMEs to drive inclusive economic growth, then we must pay attention to how we support them intervention that are very, very focused on them, obstacles removed out of the way so that they can benefit from those incentives.
Now, Doc, do you think that the move by the Apex Bank at this just concluded monetary policy meeting, do you think it was fair enough to retain rates at 27%? One, considering the fact that inflation stands around 16.05% as we speak, that's one.
That's right.
There's been stability in our currency, stability in the foreign exchange market, and the Naira gradually getting its strength, picking up strength by the day. We see that happening by the day. But at the end of the day, after that two-day meeting, we still saw that the MPC stayed firm and said, no, 27% is where we will place the MPR. How does this come to you, Doc?
Well, for me, typically when I get this kind of question, I put myself in the position that if I were a member of MPC, what would be my interpretation? I'll probably go the way you have said now, looking at the trending inflation, number one, and then even inflation expectation. There are two different things. What is the expectation about inflation? There's no expectation that inflation will tick up as we are, which means we all see a trajectory of inflation rates trending downward. So both the current real rate of inflation and expected inflation point in the same direction as of today in Nigeria. So that will give me some measure of comfort. Then I look at the exchange value of the Naira and the major factor that drive that. In the last 1 year, in fact, to put it simply, from November 2024 to date, the Naira has stabilized within a narrow band. And not only that, we've seen improvements in the factor that drive that, which relates to, first and foremost, the interplay between demand and supply for FX. We look also at our foreign reserves, we look at capital flows, both inflows and outflows. Everything there is positive for Nigeria. Banking sector is doing very well, as you saw in the GDP data. Of course, the economy itself is growing, all right? So it means there's no worry about the economy tanking. Of course, we look at generally what government functionaries are saying. And of course, the differential between inflation rate in Nigeria and those major trading currencies, differential between interest rate between Naira and those trading currencies. So when we look at all these factors, they seem to favor a stable exchange value of the Naira, and therefore no worries and no concerns. So if I were in that committee, I would have voted for a reduction in the monetary policy rate, maybe at least by anything between 100 and 150 basis points, which is a very strong signal, which also points to the fact that you desire to have the economic growth. So for NPR retained at that level, you are saying that the cost of credit doesn't matter. That's my interpretation. Because monetary policy is looking at three things. Primarily, you are looking at money supply, how that affects the cost of credit, and how that affects the price of credit. Price for those that are selling, that's financial institutions, cost to those that are buying, that's the borrowers. Okay, so that means everything you are in signaling, because NPR releases signal rate. That's the way I describe it. So what are you signaling? You are signaling that inflation rate, which in fact has already subsided, is more important to you, and growth can still waste. That's what it means. So if I were on that committee, I would have voted for reduction in the NPR, at least within that band, 100 to 150 basis points. That will not trigger any, foreign investor, loss of confidence, which is probably what I may ascribe the fact that retaining at 27% represents. So to me, therefore, I think we are in a period where the MPC should consider dropping the NPR for purpose of growth and even still maintaining investor confidence.
Indeed, that's our time. Dr. Adedipe, I forgot to mention, he's a professor of practice teaching economic policy analysis at James Hope University. Doc, thank you so much. It's always interesting having you on the program.
Thank you for having me, Tolu.
All right.